Chinese yuan. Stimulus hopes as Bank of Canada defends 6.8 TD securities. US dollar. Structural risks behind yield-driven strength. DBS.
Australian dollar climbs against yen as structural forces weigh on yen. Swiss GDP growth accelerates.
Silver converges lower with gold on surging real yields amid Fed hikes risk. What's next? Morning bid. Bonds spoil the AI party.
FTSE 100 up marginally as energy stocks rise.
Indian rupee hits fresh all-time lows as oil prices rise further.
IMF staff, Bank of England doesn't need to raise interest rates this year. Oil touches 2-week high after drone attack on UAE nuclear power plant.
Oil prices hover around $110 as US-Iran tensions simmer after UAE drone strike. United Kingdom. Sluggish jobs outlook persists. Deutsche Bank. Australian dollar US dollar price forecast. Flattens around 0.7150 after recovering early losses.
Gold price forecast. Gold US dollar steadies above $4,500, awaiting news from Iran.
All right, good morning. All right, let's go through our morning routine. Let's get set for the New York trading session. Welcome to Forex.Today, the YouTube community of more than 21,000 foreign exchange traders. We gather here today to conduct technical and fundamental analysis with the overriding goal of planning our trades in advance, because trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results, but please stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. Let's go! So, guten Morgen. Comment allez-vous? How are you? Another big week. Lots of things going on. Markets are moving. Big question here is, if you answer the poll, are the markets hot or are the markets not? Well, our goal is to look at the data and line up our trades with market conditions. In particular, we're trying to trade with the institutional investors, because we do the mathy stuff. We do the macro stuff. We look at gold, oil, Bitcoin, yields, prices on yields, spreads on yields, duration on yields. We look at monetary policy. We look at macroeconomics. We look at everything, right? So anyways, if you know how to look, you can derive things like what institutional investors are pricing in for interest rates into the future. So all kinds of stuff like that. So we're going to go through the markets to try to figure things out, good, bad, or ugly, and then kind of go with the flow or step aside depending on what your long-term bias is. So I just got back like midnight last night from Dallas, Texas for the Money Show. Thank you, Money Show. was cool.
Australian dollar, Char US dollar. Momentum points to break of 0.7 100 tharad. U Zob.
So anyways, I had a good time. That was my first time in Dallas, Texas. And I bought that beautiful hat about 15 years ago. And I'm like, yes! Finally have an opportunity to wear my cowboy hat. Yeah, very cool. Wearing a three-piece suit. And I know you can't quite see, but yeah, even the buckle and the hat. But very cool. Met some really cool people there, the speakers and in the audience. And Zach, longtime boot camper, and I. Oh, we hung out. Oh, boy, did we hang out. In fact, we went for cigars, and then we went for steak and cigars. Yeah, in a really nice steakhouse. I was very, very happy. I had a very good time. Yeah. So anyways, you should, I think the next one is at the end of July. I'm in Vegas. Yeah. And I think that one this time is at Caesars. I think. Yeah. Anyways, cool beans. You probably know some of those people. All right. Jim says, very cool outfit. Thank you. Who has the gall to wear a three-piece suit with a giant buckle with an eagle on it? And, dude, that hat's huge, man. That's a 25-gallon hat. Fits over 1% of my ego. So anyways, let's get our sit rep. Get established for the morning. Remember, this is all about routine. Do the analysis before you trade. Don't trade blindly.
Good morning, I am Aiden. Let us get you up to speed on the evolving market landscape. Today's sentiment is leaning toward a defensive posture as markets digest a significant spike in sovereign debt yields. While the longer-term monthly trend remains risk-on, the daily session reflects clear caution, driven by a 13.4 basis point surge in the U.S. 10-year yield to 4.595%. This yield expansion is exerting pressure on the NASDAQ 100 and gold while supporting energy-linked equities as WTI crude holds above 102. 1. Switzerland's GDP came in at 0.7%, a massive beat compared to the 0.2% expected. Meanwhile, a sharp rise in U.S. bond yields is making tech stocks less attractive, causing the NASDAQ to tumble. Oil prices are rising, which is helping energy companies, but putting pressure on currencies like the Indian rupee. Gold is also feeling the heat from higher yields, pulling back slightly today. Biggest movers right now, Ethereum and high-yield bonds are down. VIX, natural gas, and wheat are up.
Yeah. Some of this, meanwhile, a sharp rise in bond yields is making tech stocks less attractive. Well, okay. You can see that we're well above 4.5, on our way to 4.6 on the 10-year, which is much higher than we wanted. But when we met on Thursday, it was 4.45, and now it's 4.6. So you have 15 basis points since then. Is it really so attractive now compared to last Thursday to drop the NASDAQ? Well, it happened, but I don't think they're quite related that way. Yeah. You're like, oh, I hated it at 4.5, but at 4.6. Oh, I'm all in. Screw NASDAQ. I hate making 30% a year. Okay, but they're definitely related. But did that cause the NASDAQ to tumble? I don't know about that yet. Anyways, VIX back up. Look at that. VIX at 19. Wah, wah, wah. We don't like that. We don't like that. Bitcoin, is that a 76? Wait, I thought it was. So that's the very low end of our range. So that's very dissatisfying. Maybe it's an opportunity. Maybe we're going to, because we've seen it before. We've gone through the charts where, it's 76 and then it's 81 and then it's 76 and it's 81. And, everyone's waiting for it to go at 85 and then 90. That ain't happening right now. Dollar back at 99. I don't like that. WTI stable above 100. I don't like that. So yields up, bad. Dollar up, bad. WTI up, bad. Gold down, bad. Bitcoin down, bad. VIX up, bad. S&P 500 down, bad. Bad, 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 bad. Wayne, oh my God, what should I do? Nothing. Okay, cool. Solve that problem. Let's get another update on the headlines.
Australian dollar, US dollar. Momentum points to break of 0.7 100 tharad. U-ZOB. Gold price forecast. Gold US dollar steadies above $4,500, awaiting news from Iran.
Australian dollar US dollar price forecast. Flattens around 0.7150 after recovering early losses. United Kingdom. Sluggish jobs outlook persists. Deutsche Bank.
IMF staff. Bank of England doesn't need to raise interest rates this year.
Chinese yuan. Stimulus hopes as Bank of Canada defends 6.8 TD.
People's Bank of China, by the way.
Oil touches 2-week high after drone attack on UAE nuclear power plant.
US dollar. Structural risks behind yield-driven strength. DBS.
Yeah, so geopolitics. Now, this is interesting. So FX Street reports that the IMF staff, the International Monetary Fund, they say they don't think the Bank of England will raise interest rates. Okay, well, that's good information. They also use a different type of math than all the other agencies. They use a fuzzy logic, like they try to do a lot of predictions where central banks typically don't. They're not a central bank, but they analyze central banks and other things. And so, so they're always going to be a little different than everybody else. That's fine. And so their staff of economists say the Bank of England doesn't need to. Okay, that's true, I guess, maybe. I don't think the Fed needs to, but does it matter? What matters is what the market is actually trading. So they may not need to, but if the market is dumping the pound because they think the Bank of England will raise or whatever, or won't raise even though they need to raise, whatever, it's more like the IMF doesn't trade the pound. So do we care what their opinion is? Oh, nice opinion, you jerks. I don't know. I do care. TradeRs does actually tie into the IMF. I was just pulling IMF data sometime llast week, analyzing some stuff I was doing. And TradeRs, I just tell Aiden to go in and grab it out of the IMF because we're connected to them. So I'm like, I think they're going to, I know what it was. Updates to the World Economic Outlook. And in particular, I had him find and then download and then read the WEO and look inside that document for changes in GDP expectations for the future by the IMF. So I do look at this. But yeah, but they don't trade it, so they're going to tell you the economic point of view. You know, it's like logic versus emotion. And yeah, logically, maybe they don't need to, but if the market thinks they are, then what matters is what the market is doing. And then when they catch up and realize, oh, they don't need to, right? So I don't know. Maybe it's now because of that report, but whatever. And here's the big news right now. The market has cooled off. It's very unseasonal for this to happen. I pulled up seasonality earlier today and confirmed, like, this is unusual. But it is. I don't care if it's not what you want, or I don't care if it's not what usually happens. What we care is we know. And then the next step is we know that it's unusual. But it is what it is. Look, VIX is up. That's that. NASDAQ down. That's that. Oil is up. That's that. Gold is down. S&P 500 down. 210 spread widening. Look, bro. Love it. Hate it. Doesn't matter. That is the world. Now, if you look at monthly specifically, we're still leaning bullish, and I would, I don't think this actually even tracks seasonality, does it? No, see, we're not even counting seasonality. We're just counting the markets. We're looking at what all the different institutional investors are doing. Stock investor, treasury investors, right? Commodity traders, all these different constituencies. And they have not been accumulating risk over the last few weeks, even though they normally would be. So now we can guess. Well, we don't have to guess. It doesn't matter. It's right. It's what they're doing that matters, and that's what they're doing. I created this beautiful index radar, and one of the things we can look at is the risk basket, and it's heavily risk off right now. And again, is it because yields have skyrocketed? No, yields have skyrocketed because of this. Okay. Now, somebody, yeah, so anyways. Yeah. So last week on Thursday, when we met last, dollar was ripper strong, and we wanted that to fall. Well, it has. Aussie and Kiwi were weak, and we wanted those to go strong. I preferred Aussie over Kiwi, but Kiwi's the winner chicken dinner. We wanted Swiss to be weak. It's neutral. We wanted yen to be weak. Yeah, it's a dog with fleas. That makes sense, especially with oil prices. And you're like, wait, what? There's a relationship between oil prices? Yeah, have you seen the Indian rupee? See, I've asked you to do your research, even beyond traders. I don't know if you do or not. But I asked you to say, well, who wins when oil prices go up, and who is hurt when oil prices go up? And then look for the relationship. What happens to these economies? Look at India, and then look at the Indian rupee valuation since oil prices have gone up. And then once you establish whatever that relationship is, try to figure out why that relationship exists. Okay, this is a measure of it happening. You can try to, this is all about reverse engineering, right? Why? Why is the yen weak? Why is the rupee weak? How does that work? How about the Turkish lira? What's the rationale for its weakness? Okay. Yeah. So anyways, some money, energy, yeah, energy's up. Europe is down, Asia's down, US is down, metals are down, risk is down, crypto is down. Oy vey! So tell me, Wayne, what should we do? Nothing. Oh, well, Kiwi yen. Barely. A 3 on conviction. That's it. And what I told you before, when we've been in this situation where of 28 potential opportunities to look at, there's only one, and 27 are traps, are mirages. You might open the chart and look at it and say, ooh, technically that's beautiful, but it's not. Probably, if you think of probabilities, probably not going to move no matter how much you love your technicals. It ain't moving now. Okay? So when I see one thing and it's the absolute strongest currency, compared to the absolute weakest currency, and that is a mediocre trade, mediocre based on conviction, the absolute strongest versus the absolute weakest, combine them together and they're meh. I'd say, okay, keep an eye on that. And in fact, I would just keep an eye on this page and see if it populates with bullish and bearish signals, and then see if you can spot congruency. So if it goes, Kiwi yen long, Aussie yen long, Kiwi dollar long, Aussie US dollar long, then you're like, oh, US dollar and yen are weak, Kiwi and Aussie are strong. Good. Now that that gets you the opportunity to go to your charts and buy a dip, bro. Okay. We can step back a little bit and dollar strength. Ugh. CAD yen, no kidding. Not very happy with Canadian dollar for the Canadian economy. Euro pound. That conviction of 2, even on a swing, conviction of 4. I don't really want to do it, but sort of fundamentally, this is not taking any fundamentals into it. This is just technical analysis. So I'm like, and then this is mediocre. This is iffy. I'm like, pass. And again, dollar strength, right? US dollar strength. Really? So we've definitely gone through that risk off period. The thing is it going to continue? I don't know. Pound dollar. Great Britain can't even keep a government together, so that makes sense. And so in a risk-off moment, pound should be weak. U.S. dollar should be strong in a scenario like that. Okay, just realize if you're going to do these things, again, what you're doing is buying U.S. dollar, you're buying U.S. dollar, you're buying U.S. dollar, you're buying U.S. dollar. So you could say, okay, I am looking to buy the U.S. dollar today. You're going to trade the risk-off trade. Nothing wrong with that. Wait, did that just flip on me? Oh, I'm still on swing. Sorry. When we do the analysis of all currency pairs, G7 comparing to G7, and creating indices out of all these currencies, you might want to buy the US dollar, you say to yourself, because on the medium term, we're in a risk-off scenario, and dollar has been strengthening according to our swing trade analysis. So going back to our day trade analysis, you're like, hey, I think this is going to, an object in motion tends to stay in motion. So, hey, if last week was risk off, then maybe this week is going to be risk off, right? That's not that delusional. The thing is, you already know what to trade because we've analyzed it swing trade wise when you go here. So you're like, maybe pound down, Kiwi down, Aussie down, Euro down. Okay, great. But then we go here. That might be true. That might be the case. That might be later today. It might be tomorrow, but it's not right now. And that's the beauty of it. It might be true. It's just not true right this second. Now, if suddenly this goes up and moves above CAD, then moves above Swissy, moves above Euro, in an hour and a half, suddenly it's way up here near the Kiwi and the pound. Yeah. The thing is, pound is strong right now, and Kiwi, and and dollar's weak. So what we see is the exact opposite of what was. So you still might be doing these swing trades, right, that we saw in the signal cards, but the exact opposite is happening right now. So, whoa, dude. So, what's the recommendation? Don't do anything. See, look at this. Do it. Look. There's one mediocre trade. Oh! Up. Pound stepping up. See? Okay. That is actually quite useful because that's showing me that the yen is weakening. So all of a sudden, if you see 2 and then 3 yen pairs, yeah, you should be long yen pairs. And this is happening in real time. This is why it's happening. It's going from no clear edge to a slight edge. We're watching it. And why is it coming and going? Is it broken? No. It's changing by 0.01%. As sensitive as a poet. So, pretty cool beans, man. Where do we got PPI in Asia? All right. Look at the beat here on Swissy GDP. Wow. They're going to have to go negative interest rates. So what I was noticing is maybe the yens are waking up where these things want to go up. Let's analyze all the yen pairs. And yeah, maybe waking up, maybe. Let's look at her scatter plot. Oh my God, look at the tightening. Oh my God, nothing above 3 and -3. Wow, did that tighten? And most things are flat. Commodities up, yields up, Bitcoin down. Yeah, that seems a bit on the risk off. So you can see it's everything. This is why we track everything. Okay, everything is contracting. And remember, this is heavily focused on macroeconomics and comparative analysis of macroeconomics. And everything, what used to be extraordinarily bearish, is just less bearish. What used to be extraordinarily bullish is now less bullish. You see, like the whole entire market is going neutral. Does this tell you should be trading like a mad trader? Hey, Don Pablo, you're like, shoot, 900 standard lots? Do 1,500. Let's go. No, man. No. And what it looks like is that people are going to cash, which is really interesting because there was a time where you would hide out in bonds or treasuries, right? Remember, we had a big discussion last week about that. And I said that used to be true, that's not true. And like one of the reasons for it is your trading account or your high yield savings account is paying you the same as a 5-year treasury. So you're like, well, I could just keep it in cash. I don't have to buy any bonds. I'll just keep it in the account and get paid. Yeah. So there's competition to that. Kind of interesting. But I think the biggest thing to see here is everything going neutral and yeah, risk off. Definitely. Look at stock markets are down. Crypto's down. Yeah. Yields are up, which means, remember, why do yields go up? Because nobody's lending the government money. They're trying to entice you by raising the yield to say, well, will you lend us money at 4.4? No. Will you lend us money at 4.5? No. Will you lend us money at 4.6? No. Then it has to keep going up until somebody says, you know what? Yeah, 5.25? Yeah, I'll lend you money. Because they have to look at trade-offs and opportunity costs, right? What's the largest lot size? Well, to me, that generally doesn't impress me because it doesn't make you smart or intelligent or anything. It's just relative to the amount of money that you had. But I remember giving some feedback to a trader that had many. I think he lost like $5 million in about, I don't know, 2 months. And I couldn't believe it. He had like an FXCM MT4 account with that kind of money in it. Like he lost 5 million. So you can imagine, I forget what he had, 30 million in it or something. And he lost the 5 million in like 6-7 weeks. And I gave him some harsh, clear, constructive criticism about his trading. And he's like, yeah, well, it's only 5 million. Like, he's like, dude, calm down. It's only 5 million. He's like, I only got 30 M in this account. Like, it's play money. Yeah, so it's relative, right, Don? Like, if I lost 5 million in 5 weeks, I'd be pissed. It was absolutely nothing for him. He's like, really? Like, dude, it's 5 M. Chill out, bro. Yeah. So, the lot size doesn't matter to me. Now, and he burned the money making nothing but stupid trades. So if I don't remember the lot size, but let's say the lot size was high, I'm not impressed, especially by somebody that loses the money. I'm much more impressed by someone with a $10,000 account that has a sharp over 1% or 1. Like, for example, I think I told you guys this. I went on to one of those, what do they call them? Copy trader type sites, one of the big ones. And I analyzed the history of of something like 1,000 of their successful, profitable traders. Right? So Don says she had 140. Well, like friends of mine, I'm not going to say who, but friends of mine just crossed the 600 million assets under management a week ago, and they were high-fiving and for a little party, I think. So even 140 million, again, to an institutional investor, that's a joke. That's nothing, like absolutely nothing. That's their profit. Well, to some, not, but yeah. So, actually, to an institutional investor, Don, and I'm not even joking here, they would chuckle at that number. They're like, "Wait, you have 140M? Why are you in the room? Why are you hanging out near me? Why are you breathing my air? Like, trust me, I've had that feedback." They're like, "Dude, how many B do you have? How many full yards do you have? How many full cars you got?" Right? So 140M, Don. Now we could analyze it and also find out that her 900 lots might be the right sizing. Depends on her, right? That depends on her stop and all that kind of stuff. So she might have a huge stop, and even though she can afford it, she can't afford the actual drawdown, so maybe it's bad. But we can do all kinds of analysis, Don, and find out she might be under leveraged, she might be over leveraged, she might be perfectly leveraged. Like, so the 900 standard lots doesn't impress me at all. Yeah. So, what I was saying is I went to one of these copy trader sites. I downloaded the history on 1,000 profitable traders that I could copy, right? And I analyzed their track record. Very, very simple stuff. I calculated a Sharpe ratio. These are 1,000 profitable traders on a copy trader. Not one of them had a Sharpe ratio of 1, which means of the profitable traders, they don't even make enough money to compensate you for the risk. Another way of saying it, reverse engineer that. Yes, they're profitable, but they're taking way too much risk or somewhat too much risk. And there's no way to know that it, like they might be profitable today, but there's no mathematical certainty. In fact, there's more mathematical uncertainty about their future profits. So maybe up until today they're profitable, then you invest, and then 6 months to a year later they're significantly not profitable. And I think if you've ever used a copy trader service, you probably have combed through these, find out some trader claims or shows that they're wildly successful and that they have a high win rate, and you enter, and they've been doing it for years, and then you give them $500 to trade and suddenly they lose money. You probably have an experience like that. So I would be more impressed with a trader that has a $10,000 account and a Sharpe ratio above 1. And I'm like, hey, you're doing a very good job. That's impressive. And they're kind of a unicorn in the retail Forex world. And if you really analyze the history, the ones that are trying to impress you, like they're up 100% or something. Oh, I make 100% a year. You're like, I'm going to trade with this person. But if you know what you're doing, you actually download and look at the reports and stuff, you can see that it's not good trading. And you're like, but they're up 100%. Yeah, but high probability based on the way they're trading, they're going to be down 100% in the future. And you can tell where the lot size is jumping around, and you're like, okay, this person's making 1,000 trades over 3 years, but how many of the trades are responsible for the profit? You're like, out of 1,000 trades, 50 of the trades have produced all the profit. And then you look at it, and it's because those lot sizes are much higher. They gambled. And then you realize they have 45 different trading accounts, and they blow up 44 of them. But then they upload the 45th one that got lucky, and they sell it to you, and you hook up and trade. They make money, and then it fizzles out. So anyways, I care about your Sharpe ratio, then I care about your Sortino ratio, which is your volatility and correlation to the market during the bad times. So I have a correlation over 1, and my funds outperform when the market is tanking. Like, we do better when the shit hits the fan, which means you're safe, right? You're hedged. Yeah. So anyways, there you go, Don. But I appreciate it. I mean, I like the stories. Look, you gave me an opportunity to tell a story about what impresses me as conservative, repeatable trading. Right? There's lots of idiots with giant trading accounts. Yeah. And they don't impress me. I don't say she's an idiot. I don't know who you're talking about. But the size itself means nothing to me. Anything? Let me just eyeball here. Yeah, so Jay Powell, he's no longer chair, is he? Yeah. Kevin Warsh cuts rates at the first Fed meeting, 90%, 97% chance. Niet. Bank of Canada, 96%. No change. What about July? No change. What about ECB in June? 87% chance of a hike. Wah, wah, in 24 days. ECB raises interest rates, the market says. Okay, this is not the central bank. Okay, this is what the market is saying. It's not what the IMF thinks. What did the IMF say? Bank of England's not going to raise or cut interest rates? Well, what does the market think? The market agrees, but they actually are trading it. They agree with their money, not their opinion. Ha! That's a different kind of vote now, isn't it? Commodities, GDP, Canada recession. No. Japan recession. No. China GDP between 4 and 5. Yeah, probably. Mexico GDP. Ooh. Don't know. They're still trying to figure it out. 73 days from now. Oh, look at that. Aussie dollars moved up. Now, apparently, maybe it's because of that. What the heck? How come, dude? Hayden. So it looks like he's just not filling it in properly. It seems normal this time of year for that to happen. But this is why I give you the table view. For some reason, it didn't pull COT on Friday. And it's not reading the charts. Or he. Is it a he? What is Aiden? Our machine with a male name. I also had a great female name for our AI, and I thought, oh, I should buy the domain, and it was like $300,000. Someone else had the brilliant idea. Were you there, Clever? So I'll update that for you today. So I was talking about May, and VIX is up, stock market's down. Yeah. Well, why didn't you show up then, Clever? Okay. US 100. I'm not sure what he means by that. Oh, that's what kind of stumbled me there for a second. US 100. Okay, S&P 500, silver usually up, S&P 500 usually up. VIX is usually down. And hey man, nothing. That's not what's happening now. And so I had already eyeballed this stuff. Okay. Isn't this nice? What do you mean you would have? Should have been there. Yeah. So anyway, so I know this is normal. So then when we start the day and I see VIX up, stocks down, gold and silver down, I go, I know that that's unusual. Now remember, our seasonality is displayed monthly but calculated weekly. So we have weekly calculations. So when you do the monthly analysis, what we're trying to figure out, if there's a peak and trough, when in the month does the peak and trough happen? So for example, we're in May right now. Okay. Now, May typically, and maybe you like the table version a little bit better, right? May is usually an up month. Okay. Again, I got to get rid of that little floaty thing. It's not helpful. Okay. This month is up. Then look at the next month. Is it usually up? No. Over the last 20 years, yeah, but not over the last 5 years. So something may have changed. So May is a flat month. And then what about, June is a flat month. May is up. June is flat. And July is down. In fact, August is down and September is down and October is down, although less down. So what does this tell us? Somewhere in May, a peak forms, a top Now, sometimes it occurs in June. It used to occur in June, but for whatever reason, the peak seems to be happening more like May. So I added this to say, well, when? Okay. And when you statistically analyze it, it's not clear. Okay. May pattern analysis into June analysis. Isn't that cool? So there's a transition from May to June of the market dropping, you see? But when it occurs is not clear because statistically there's no pattern. We just know that there is a pattern. We peak in May and we drop in June, but you could also potentially ride it out to October. Oh my God, could you be short the euro dollar from today all the way to October? Yeah, that's what it said. In fact, here's the projection. What did we say? It runs all the way to October, and then somewhere around October there's a recovery? You mean like this? It's already been projected. You already have a model for the future. Did you know that? Are you even using this page? This is one of the most important tools on the Tradar's analytics platform. It's already been done for you. Now, is it the future? Dude, nobody knows the future. But it's 20 years of past data overlapped with what we know now. Yeah. I had to work really hard at this, by the way. Like, this is what I think, which is still surprises me and is even a little bit disturbing. So there you go, bro. It's a prediction of the future. So now if something different occurs, you can say, well, that's what's not happening relative to your model. Cool. All right, let's burn through some stuff and move on.com. Ugh, blah. All right, nobody's lending money to the United States government. What do you think about that? We are literally above 5.0 now. That used to be a psych level. Huh? What used to be resistance is now support. There was a time when I held a boatload of the 20-year, and based on what they teach in schools, you would expect the 20-year to be going up right now. Well, we held on to it for a year or so, and because we were making good income on it, but it wasn't performing and it wasn't hedging. So eventually we weaned ourselves off of the 20-year. And I look at it now, and the 20-year is collapsing, and the stock market's falling. So again, last week, remember somebody said, oh, well, stock's down, bonds up. Bullshit. Remember that? Well, dude, they might be hiding out in the 3-month, maybe. But no. Stock's down, bonds down. So he didn't pull on that other page. May 12th, it seems right. Nobody likes Doge anymore, huh? Yeah. Platinum, copper. Gold didn't even make the main list. Huh? Well, let's start with currencies. Money went into the Mexican peso, yeah. Or, well, I shouldn't say went in. And in fact, money came out of the peso. Okay, the market's long peso, long Aussie. long pound. Ooh, I wonder if that's going to change. Oh, money went in. All right, all right, all right. Euro market doesn't like it. So money net short the USD. So what does this tell us? They're doing carry trades, huh? They're buying Aussie and peso. Okay, so what changed week over week? They sold some of the peso. All right. And they sold a little bit of the Aussie. Little more came into the CAD, probably just trading high oil prices. Like the market is net short CAD. Institutional investors don't like CAD, but because of oil jumping over $100 on WTI, they were obliged to, do a swing trade. Monetary policy possibly changing at the Bank of England this year. At least that's what the market's talking about. That was a little attractive. Okay. Long-term risk on, short-term risk off. Money went into the dollar week over week out of the yen. So that's good. So the market is still short yen despite all this intervention. They're net short and got more short. So, all right. That's quite interesting. Not a lot of love for crypto. Right? So you're like, wait, crypto? Bitcoin's back down to, what were we, 75? Yeah. Yeah. Market is massively short Bitcoin. So institutional investors are not buying up Bitcoin right now. Not this market, not this analysis. So if you think Bitcoin's going back to 100, well, I don't know. It doesn't look like it now. Stock market, not a lot of love, not a lot of trading. Hey, do you remember last week? It was kind of sideways, huh? Yeah, yeah, not right. Commodities. When you have persistent high inflation, what do you buy? Real assets. Defined as gold, copper, silver, soybeans, corn, oil. For some reason, no love for wheat. Now, this was one of the first things we talked about after COVID. And I talked about higher unemployment rates forever now and higher inflation forever. And I said the inflation comes from fiscal and monetary policy. And I said at some point, the Fed will shrink their balance sheet. But, we're talking about, 5 years ago I said this stuff. And that's possible, but it's going to take a very long time. And if we ever enter another kind of recessionary exogenous shock, the Fed's probably going to just build up their balance sheet again. So the Fed may never get us back to where we were, which was horror. Our balance sheet was terrible to begin with, but then it ballooned out of control. But I said at least they could easily do it. It would take time, but they could easily reduce their balance sheet. But I said there's also $5 trillion US in the economy that shouldn't be, that the federal government put in, not the federal bank, but the federal government. And they'll never take it back. So I said we'd have permanently high inflation and permanently higher unemployment, meaning my definition back then was full employment is not going to be 3.5, it's going to be 4.5. All right. So why are we talking about this now? So I said, so what do you do with your money then in that situation? Remember, this is 5 years ago. I said buy real assets, stuff that you can touch. It could be gold, copper, silver, soybeans, right? I said you don't need S&P 500 futures. What you need is food to feed your family, and you're willing to spend your money on food, not a financial asset that does nothing. I said real estate could be an interesting thing to look at, especially because back then interest rates went up, mortgages went up above 10, right? So I'm like, yeah, if mortgages drop back down to 5, game on. Real estate will take off. I also said that we're going to enter a generation of renters. Yeah. Yeah. So I said back then, if you can get some real assets for cheap, you should do it. Yeah. So anyways, I look at it, based on everything we've just seen, the only thing up are real assets. Yeah. So anywho, very interesting. Mm. Mm. Markets may be warming up now. Is it finally warming up? Sell yen, sell yen, sell dollar, which I like, USD. What else? Sell yen, sell yen. So mediocre, mediocre. So these yens are trying to weaken. See, the other view I showed you is filtering all this stuff out. And it doesn't become interesting until, I forget the number. I think you got to be over 3.3 on the short term. But so sell US dollar, sell Canadian dollar, sell US dollar, sell yen, sell Swissy. That is actually, if you look at this, risk on, 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 risk on. It's kind of starting to work out. So this is flat, I wouldn't consider it. This is flat, I wouldn't consider it. So the other view, I filter all this stuff out. This is just telling you what is happening right now. Most of this is just not happening. Like the stuff down here will easily just move over here. It's just not doing anything. So you only care about the top ones. 0.33 is mediocre at best. Points, right? Yeah. 0.66 is double the opportunity here. So long, 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 long. And that's it. Kiwi CAD, pound CAD, Kiwi dollar, pound dollar, Kiwi yen, pound yen. I see the congruency, and maybe this moving to risk on. See? Take a screenshot. Boom! Now you know. So then you can go to those pairs. What does this say? Up, up, and up. Okay, this is decent, this is decent, and then pass, 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 pass. All right, so you got 2 there. Pound up, Kiwi up. Okay, we were interested in some of the pound pairs. These are all day trades for market open here. Pound yen, definitely. Pound dollar, definitely. Pound CAD, definitely. Pound Swissy, maybe. Pound Aussie, pass. Okay? I bet you take longer to do your analysis. Okay, what's my analysis? Look, done. What's my thoughts? Well, let me finish this for a second. Okay. Pound yen is the best. Kiwi yen is second best. Swiss yen is a pass. Done. But what do I think? What are my thoughts? Well, a chart is the last thing to do, but okay, but you want my thoughts. What do I think? All right, well, I'll tell you what I think. It's actually neutral. If you compared GDP between the UK and Japan, okay, pound yen up. Inflation, pound yen down. Unemployment, pound yen down. Interest rates, pound yen up. Kind of a mixed bag there. It's a score of flat, COT, and trend. Yeah, see, we didn't. Okay, that part of the back end is not working, so I don't have a complete score there. Pound yen more likely up or down. It's down in May and up to June, so if you got long pound yen, you could probably hold it for between 4 and 6 weeks. Institutional investors are flat. Retail investors are flat. So, full conclusion, I'm neutral. It might work, but it's not working now, and the market's flat. You have no edge. Nobody gives two hoots. So it'd be like, okay, it is moving now. There's no way to know if it's going to move more. So if I were me, I'd go for a home run. I'd try to get in. I'd put in a small lot size. I'd put in a big stop. And if I get lucky, this goes up until July. If I get unlucky, I lose a tiny bit of money. But if this does continue even for a few hours, I could probably get my stop to break even and either hit a home run, right? Or lose nothing. So I'm like, okay. So I'm probably not going to hit a home run on it because nothing's happening, but it has the potential. Is that fine? What do I think? What are my thoughts on pound yen? Well, I know what almost always happens, and I can tell you why it's happening, and I can also analyze it very quickly. The chart's bullish, yeah. Everything else is neutral. So that's why I say, like, maybe I get a home run out of this, because what if I go long and then due to seasonality, because remember, part of the neutrality is that May is usually down for this, but we also know somewhere in May, we find a trough and we work our way up all the way through June and into July. So maybe we've troughed out. Maybe that's your trough. So if I can buy it here, it's not great now, but if I can jam my stop at break even, do I have the guts to let the sucker run? I do. I'm a gutsy dude. Okay, there it is. Yeah. You want to look at it on a long-term situation? Yeah, let's take a look. And there it is. It is statistically flat. But, and that's a big but, wouldn't it be interesting if it climbed up? So this is where we are now. So when you look at it now, oh, pound yen is up. Yeah, what's the likelihood it's going to be up 6 weeks? Well, we just made a lower low. If there was a MACD, I hope you can see it's above the waterline but falling. Can you see the MACD? Can you draw it with your mind? Okay. And you probably would say it looks bearish. Well, really? Did you see the linear projection? Yeah. So statistically, this is a bear. So we're here, and this is where retail traders get all, excited. They're like, oh, it's been up for over 4 hours. Oh my God, I'm so bullish. And then you find out tomorrow it's down. And you're like, oh, my broker traded against me. No, you didn't do enough analysis. So when I look at this chart, I would assume somebody's thinking about selling a lower high. I don't know about you. So I look at this chart, technically it's bullish. I look at this chart, statistically it's bearish. Hey, is that why I'm neutral? Hey, is that why I'm neutral? Oh boy. Yeah, maybe, right? So anyways, that is my thought on pound yen. The thing is, that took me, 10 minutes to explain it to you? But with traders, you have that in about 10 seconds. You should never, ever, 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 ever log into a YouTube channel and ask a YouTube guru what they think. Just assume they're stupid. Don't even listen to me. I might be stupid. Thing is, you have the ability to read what the institutional investors are going to do. So are you going to listen to a group that manages trillions of dollars, or some YouTube guru with no education, no true experience as a professional trader, never got licensed, never got regulated? Okay. They want to impress you because they'll put $200,000 into a car. A car. If you're an adult, you put $200,000 into your children's education. Huh? I have 2 kids at college. $50,000 a year each for 4 years? No. Guess what? They're doing their masters for 6 years. Yeah. And that's the kind of person I think you should listen to. Or, not some phony baloney knucklehead on YouTube. Yeah. Yeah. I have 2 pieces of paper behind me worth $200,000. So a Lamborghini impresses you? Really? Whatever, bro. Right? Cool. So anyways, there you go. Okay. So I had all that analytics, I just had to click a couple of buttons and I know everything about pound yen. And that's probably a lot more than your favorite YouTube guru that gets 10,000 people watching them in real time. Like, cool. Let's check the schedule. Oh, I have to log in. What do we got today? Webinars. Just me. This is now. This is this afternoon. This is this evening with Maida. I think it's possible one of these evenings she'll be setting up the Asian fade trade with you guys, and you'll watch Cuba be liberated live in real time. Which means you might get some free salsa dancing lessons while you're setting up your Asian fade. Yeah. Wednesday. When Pegler's down for Wednesday. Yeah. And this is very interesting too. Brian looks like he's double booked. I can't find this old event. I don't know where it's coming from, and probably neither does he. So this is the right one. That's not. And I'll have to go into support, figure it out. Well, I went to Harvard for 2 degrees. I did MIT and I did Oxford. I also went to San Jose State University. What other schools did I consider? None. None. It was Harvard or nothing. And it was tough to get in. It was less than 99% acceptance rate. It was or 1%, less than 1% acceptance rate. And of the 20, I think it was 20, of the 20 that were accepted, only half graduated. And they tweaked the program because it was too hard. Yeah, which I'm very proud of because I graduated my first degree with honors, and the second one, an A- student. So I got 5 years at Harvard as basically an A- student. Dude, that's good. They talk about grade inflation. Dude, I worked my ass off for that. That was hard. That was really hard. Grade inflation? What grade inflation? So, anyways. All right. Well, I'll see you guys at 4 o'clock then. Hey, did you know TradeRs is free? We should probably discuss that. Did you know it's free? So if you were impressed, well, I think you're going to be impressed with what you get for free. Has the Harvard degree open doors? Well, let me tell you my experience. When I got my first degree in macroeconomics, I posted it to LinkedIn. Later that week, one of the largest regional banks in the Atlanta area that handles all of the Southeast, they contacted me directly and wondered if I was interested in running their Forex trading desk. So you tell me. within 1 week. They called me. Well, that's what happened. Peace on earth. May the pips be with you. May your profits be above average.